All right, yeah, my name is Afshin. Happy to have you guys here. We are going to talk about tokenization. Everyone is talking about tokenization, whether it's real, it's fake, it's a good time to enter, what is the regulatory about it, is it trustable, is it safe, or it's all a scam. Hopefully we will get some clarification by end of the session today. In order to do that, I have three bright-minded people with me here, the expert in the area. Please welcome me. Please help me welcome them. Amna, Amir, and Anton. Wow.
Three A's.
Sorry?
I said 3 A's, I think.
Actually, it's 4A. I'm
4
A
A's.
also. So interestingly. Yeah, we had another one. We removed him because he was not starting with A, actually. So, yeah, Amna, maybe you can start with some with introducing yourself.
Yeah, thank you. So hi, everyone. My name is Amna Usman Chaudhry. I'm a financial economist and strategist for frontier technologies, including AI and blockchain. I'm a graduate-level lecturer with teaching experience in London and Dubai. I'm a founder, board member, and I've had the opportunity to work with international organizations ranging from UN-affiliated to government stakeholders. And I'm really excited for the conversation today.
Amir, please.
Yeah, thank you. My name is Amir Tabish. I work at OFZA. We are a regulated VASP, regulated under the Virtual Asset Regulatory Authority in Dubai for broker-dealer services, exchange services, and management and investment services.
Wow. Anton, please.
Thank you. My name is Anton Golub. I'm the founding member of RWA Labs. We're a boutique advisory firm. We work with authorities and the regulators here locally in the region on creating laws and regulations that enable tokenization of real-world assets. And we work with enterprises, asset managers, family offices, so entities that are very asset-rich on tokenization of their real-world assets.
Wow, great. So we have an expert here, we have a compliance here, and we have an advisor here. I'm more or less user. So yeah, let's move forward. Maybe we ask the expert to explain what is tokenization. Give us the overall view of the tokenization.
Yeah, sure. So tokenization is essentially representation of ownership of an underlying asset. So that is done and recorded on a ledger technology, DLT, or blockchain. And that asset can either be tangible, such as gold or real estate, or it can be intangible as well, like property rights. So if we kind of imagine back in the day, we learned about Venn diagrams. So you have tokenization, and within tokenization, you have a subset of real-world asset tokenization, which has been all the rage these past few years. And that encompasses real estate, art, basically real assets like gold, commodities, and the likes. And then within that, we have another subset that is financial instruments tokenization. And that encompasses bonds, sukuks, stocks, and even stable coins, something else that has been, a lot of focus in the past year especially. So basically, it's like a very exciting field, and the reason that we tokenize these assets are all the advantages that blockchain technology brings: easier access, fractional ownership, transparency, and easier transferability as well. And it's a very exciting space. It's predicted to grow up to 5 trillion as per city by 2030 to even 16 trillion by BCG. So exciting conversation today.
Okay, Amna, you mentioned a lot of things here: real estate, gold, commodities, arts, and so on and so on. But Amir, maybe you can answer this question. Which one of these are actually live right now and they are used properly?
If you look at capital allocation today, we can clearly see it moving into familiar, yield-bearing, and cash flow-rich instruments. So private credit is now a $19 billion market. That constitutes over 52% of the total market. Add to that tokenized bonds, treasuries, which is around 9 billion, which is another 25%. That makes up a total 80% of the total real-world tokenized assets. When we look at tokenized equities, it's slightly modest versus fixed income. It's currently around $1 billion in total. Now, real estate is a little bit more nuanced. While it is driving and captivating attention, well under 1% of global real estate is actually tokenized. So we're looking at around $350 million of tokenized real estate across 57 projects held by 10,000 investors across 10 countries at the moment. So the pattern we're seeing is relatively clear when it comes to tokenization. Where tokenization improves access, settlement, and liquidity at the margin, it works. And where it simply digitizes ownership without changing economics, it struggles, right?
Okay.
And yeah, sorry. And the surprise that to many people is that the most complex instruments are not actually leading the way. The simpler, legally clear, and cash flow rich are.
Wow. So yeah, that's great. So maybe we can hear from Anton also, since you are advisor, you are facing end user here. Where is the real demand? So we can see actually, most likely there are institutional, there are retails looking into different type of the tokenization here, as Amna and Amir mentioned. But how about your customers? Where do you see real demand actually?
Yeah, so when you talk about the demand, actually we have two groups here. One is actually the issuers, what the issuers want to tokenize, right? They have some ideas, and actually Amir has explained very well where the bulk of tokenization has been very successful, which is in very liquid, kind of fairly well-known assets like tokenized US government bonds. But on the other hand, then you also have what do actually end clients want to buy, right? What do they want to, where do they want to allocate capital, right? And I will focus more on the second part, right? Now, the demand is actually very different when you go actually around the world and when you look at actually at different investor profiles. Now, I will point out what we see here locally within the country and the region. Demand is predominantly for commodities and real estate, actually. Now, when I said that just now, you would say, well, of course, right? This country and this region is very rich in commodities, let's say in oil, or it's a gold hub, in context of trade, silver hub. Or on the other side, you actually have one of the most exciting real estate markets in the world is here in the country, in the region, right? In UAE, right? So this is where we see actually the most demand. And now let me tell you a little bit kind of what that means in practice. And I will give now an example that we discussed actually prior to the panel, is perhaps you have seen the amazing collaboration between the Dubai Land Department, VARA, the virtual asset regulator, and a couple of more stakeholders more on the industry side, like PRIPCO, Control Alt, Zenbank, RippleX, and so on. And what they have done is they have tokenized a couple of estates, real estates in Dubai. These were actually flats and villas and townhouses, right? And they did that in a collaboration with the Dubai Land Department, where the token that you buy, in this case, gives you the actual direct ownership of that estate. So this is very important because for the first time you had recognition by the authority, so this is the Dubai Land Department, and by the regulator that this token actually represents real estate, right? And this was a big success story, and a couple of flats were tokenized and they were sold out within a couple of minutes. So imagine you tokenize something, you put it on a platform, within a couple of minutes this is sold out. That's because there's actually demand for UAE real estate. Tokenization is just the enabler, right?
Yeah.
You can buy UAE real estate, you know, either way. It's just that tokenization lowers the capital that you need to put up to buy it, so there are small ticket sizes, and you can do that at lower cost. They structure it like that, and they give you trust and security because it's actually backed by authorities.
Wow.
Yeah, and I'm sorry,
on.
one more point that Anton mentioned. Even before what we've seen lately by the DLD and by the regulators, if you look at the global real estate market, Dubai has been very active in that space. So we had about $129 million of real estate project worth in Dubai, for example, or in UAE, across 23 projects versus, for example, the USA, where you had about 145 million across 17 projects. So UAE has been very active there, and the kind of changes that Anton mentioned are a foot in the right direction.
Yeah, that's true. Actually, UAE has been one of the fastest growing country in terms of tokenization, as far as I know. I know that, let's say, Singapore was the early player, so they are more adopted. But in terms of the speed, UAE is going way, way faster than that. And actually, the example that Antonio mentioned is bringing me back to the overall detail that I read about this exact point, that there was a company in US, a limited company in US that started such a thing, that they were buying different houses and they were letting people to own part of that house and earn from the rental or the growth of the value of the house. But then something went wrong and they lost the value, and so there was a scam situation and so on. And we see exactly how tokenization is resolving that part. So that's actually as you mentioned, it's the enabler. It's how it's helping the whole.
So we have companies offering similar services here, but they're highly regulated companies. And this is why it's important to note, when you're dealing in digital assets, tokenization or otherwise, choose a highly regulated entity under a highly hands-on regulator, such as VAR.
We will get to regulatory, actually, and we will get to you with that regulatory. I was listening to actually Paul from Vara in the previous discussion, and he mentioned slightly about the whole situation from Vara. But yeah, let's go to Amna about the liquidity. Do you see the real liquidity exist here, actually, for all of these asset types that you mentioned earlier?
Yeah, great question. And I think what's really interesting is that the equation of liquidity gets confused. So everyone, not everyone, but there's a lot of misconception. I know we have very well-informed audience here, but a lot of people mistakenly think that if we tokenize an asset, it's like a magical wand or a crystal ball, and suddenly, regardless of how illiquid the asset is, it will have massive liquidity. But that is not necessarily the case. So what's important is to realize that with tokenization via blockchain, you do get the technical capability to transfer an asset, and that is basically a technical ability. But specifically with illiquid assets like real estate, you also need a secondary market, which is basically a market requirement. So that way, liquidity is a market requirement. The ability to transfer the asset is there, but not necessarily a place to transfer. So we're sitting at Dubai World Trade Center at IFX Expo. If we tokenize the building, and now we all have, we have these tokens, but we want to sell it. If there's no market to sell it, then we would, not necessarily have the liquidity. And that is why it's very interesting what's happening with the project that Anton mentioned with the Dubai Land Department. So this is the first in the case, where the Land Department, it started last year, the Land Department with Pripco, Mint, government entity under the regulators VARA, tokenized an asset, a real estate. It was sold out almost instantly. Anton mentioned that as well. 70% of the investors were new, so it's great for financial inclusion as well. But now the real test begins, because in exactly a week, on 20th February, the second phase will come into play where liquidity will be tested. So the Dubai Land, DLD and VARA are, along with Pripco Mint, on 20th February, if you haven't heard the news already, will set up a secondary market with 7.8 million tokens, and that will be kind of the next phase of this experimentation of liquidity. That said, if an underlying asset already has liquidity, such as BlackRock's BIDL tokens, we have Franklin Templeton's Fobex, all of these, with that, liquidity is increased. So by increasing operational efficiency, reducing friction and the likes. So if the underlying asset, for example, is like in these examples I gave, is cash equivalent, if it is already liquid, that it enhances liquidity, but at the end of the day, liquidity is a market requirement. Tokenization gives it the technical capability, but not necessarily provides the market structure.
So when we talk about tokenization, as you mentioned, the risk here being the liquidity and actually how we are testing the liquidity, then most of the people actually think about, when we talk about tokenization, they think about coins, crypto coins actually. There's some of them that they are claiming that they are backed by the actual value. And they just use tokenization as a fancy word to just mask it. Company A can come and say, okay, I'm giving away 10% of my company, and I'm tokenizing it based on the value of the revenue that I'm earning for X amount of money. But there is no real evaluation here. And actually people, when they see these listed or unlisted with a good pumping advertisement, my background is marketing, you can pump everything, actually. That's how actually all of these pump and dump coins came out. But how people can actually recognize this? What is we are facing a huge risk here. So beside the liquidity, what other risk we see here? Amir or Anton, either of you guys can answer this question.
Well, secondary market, which is what Amna specified, is the main thing to really bring out liquidity. So the existence of market makers, liquidity providers, participant buyers and sellers. But the other thing is definitely enforceability. So the legal structure has to be clear. So these are kind of two impediments. Now it's funny, both examples that you gave are about scams, and again, the being here, working with regulated entities saves you a lot of headache into making sure your money is safe. And mainly I think this is Anton's turf, which is what they're doing in drafting the laws, the legal structures, and this is where enforceability comes into place. But
yeah, I would just add to that. So you have three pieces here. Is actually one is liquidity, enforceability, but also what we really see as a key factor when we have these discussions with the regulator is pricing. Because if you tokenize, for instance, gold, and you place it on a secondary market to trade, right? So it's tokenized gold traded on a secondary market, and the price of gold is 5,000. The regulator will not see it very lightly if the price of gold on your platform is at $4,000 or at $2,000. Likewise, if you tokenize a real estate that's worth $1 million dirhams, 1 million dirhams, right? And you have 1,000 tokens, you kind of understand the price should be around 1,000 dirhams, right, for each token. So we really see this a big criteria when we talk to the regulators is that the price should reflect the fundamental value of the asset, because this is what you actually mentioned. Yeah. In the crypto world, when you have a utility token, is it $1, $10, 1 cent? Nobody really knows, because the pricing is very difficult. The fundamental value is very difficult to derive. But when we are talking about the real world asset, the price should reflect the fundamental value.
I have a challenge for you, Anton. You said that you are running an advisory company. Do you have clients from other places rather than UAE?
Yes.
So actually I want to ask audience here, anyone from outside of UAE? Raise your hand. Don't be shy. So yes, we have these people and they are not protected under VARA. So, and they are not following actually the legislation of regulatories here in UAE. How about them? We have people from Iraq, we have people from Turkey. They don't have regulatory over there. How they are going to examine?
They can still use UAE regulated entities, just to be clear.
Yeah, let me add to that. So basically what you're referring to is the question of distribution. what license do you have, and where do you go with that license to sell the tokens in plain language, sell your products and services. Now, the UAE regulators are actually very clear about that, is that they, in principle, I mean, I'm not putting words in their mouth. We had the regulator on the previous panel, but in principle, UAE is not very open to something you called reverse solicitation. So they're not so open to you having an offshore license, an offshore platform, and then coming to UAE and actively promoting your products and services to UAE residents. This is something that's not allowed, actually. And if companies try to do that, our amazing regulators actually react. So they approach the company and they say, hey, you do not have a license here. You're not allowed to sell the products here, right? But the question is then, what protection does a client have if he ends up on that offshore platform, right? Exactly. And that's why we are always going back to the point that we mentioned at the beginning. Regulation and laws are so important because the end client needs to be protected, right? And that's why I agree absolutely with Amir. If you're looking for products and services as a UAE resident, it should be advisable that you then operate on a platform that's regulated in UAE, because that gives you protection if something goes wrong. Likewise, you're from Europe, then you're under the jurisdiction of a European regulator, depending on what you do. And again, Europe is not very open to reverse solicitation. US is not very open to reverse solicitation.
Yeah, we have, West is always slow when we are talking about tokenization, crypto, and so on. But how about the institutions? Amna, based on your observation, do you see institutions are actually moving toward tokenization, or they are just experimenting right now?
Yeah, so institutions, I think we have moved past the phase of experimentation. That said, there's different phases. Some of the institutions are at very early stages, and others are more advanced. So we've already, mentioned the importance for institutions, the regulatory clarity. Basically, institutions want, when they're expanding, they look at the market structure. So that implies there's regulatory clarity, there's clarity of ownership of the token, the asset. There is clarity in, safeguarding of the asset, governance, who to go to if there's a problem, and even, preferably a secondary market structure. And if not a secondary market structure, at least rules or potential of that happening in the future. So these are very important for institutions, and many regulators around the world are catching up. So if you look at some of the top examples, BlackRock, with their BUIDL platform, US tokenized treasuries. In fact, just last night we had this news that BlackRock's BUIDL token fund, it's a $2.2 billion, BlackRock is the largest asset manager in the world, has collaborated and put up their BUIDL fund, $2.2 billion worth, on Uniswap, which is the largest in DeFi, one of the largest DEXs, decentralized exchanges in the world. So a very clear movement of TradFi and DeFi coming together. So there's like a lot, with Franklin Templeton, we have FOBEX, you have HSBC tokenizing gold, you have a lot of even Qatar Financial Services, Financial Center, tokenizing towers, and a lot. So a lot of momentum. Even in Dubai, I know we've discussed a lot of DLT today, but a lot of institutions here also are proactively working on tokenization. DMCC is working to tokenize the largest bar of silver, to break a Guinness World record. So lots of stuff happening. We're definitely beyond experimentation into allocation.
So the hype exists in institutions. Now let's talk about retail. So does it mean if BlackRock is entering, HSBC is entering, and others, does it mean it's a good time for investors to enter, for retail investors to enter? What is the signal here? Is it just the fact that big players are coming in, so I should go in? Or do you see it different, Anton?
Yeah, so look, when you observe the digital asset industry for the last 16 years that it exists, it was always predominantly a retail industry, right? So all of these digital assets, blockchain, cryptocurrency, it was predominantly retail because the institutions, due to their mandate or regulation, were not allowed to access it directly. So the institutional investors early on were like family offices who had like a broad mandate, but it was not a regulated entity that was coming into that. So I want to emphasize that is because now we have more regulatory clarity, so more institutions are coming in. And from my understanding and what we see is that the retail investors are very active, but from what I've seen, actually, it's very much dependent on the pricing or the attractiveness of an asset, you know. And I'll give you an example about that. So for instance, one of the larger asset class that's been tokenized successful is actually tokenized gold, right? And now if you ask me, well, how was that progressing in the last couple of years?
Yeah.
Well, it progressed a lot in the last 6 months when the gold price went up, right? Then you saw actually that couple of companies that successfully tokenized gold, which was Paxos and Tether, you know, you saw that the AUM, the total value that was tokenized kind of grew in this last 6 months. Why? Because there was a demand, right? Prices were going up. People, retail wanted to get exposure to that, and the AUM growth, right? The size grew. But now to circle back for the most popular asset classes that are tokenized today, so this is private credit that Amir mentioned, and tokenized US government bond, this was predominantly more on the institutional side. So the retail was not buying that in the digital asset industry for many different reasons, but I'll just mention a few, is because actually the return was too low. So if you bought US tokenized government bonds, the return was 5%. When you look at the whole digital asset industry, there are more attractive things from a return perspective, but also they have higher risk, obviously.
So, yeah, you mentioned risk here, and you mentioned actually gold going viral because of the whole volatility in past 6 months. Yeah. We have seen gold going like 10% up in January, at 15% down, again 5% up. Based on what you are seeing, I see some sort of a match between client behavior of CFD industry and tokenization.
Absolutely.
More or less, that's what is happening in the whole CFD industry. I'm coming from the CFD.
Yeah, absolutely. But let me just add is I think like the CFD industry is a bit different because there's a margin component.
So that's my question.
Yeah.
So how about the risk of trading here for investors?
The Forex industry, the CFDs industry, is because it's prominently the value proposition is more on the leverage side. When you trade this tokenized gold and so on, there was no leverage practically involved there, predominantly, because people are buying basically fractions of gold, right? So they're buying gold tokens, right? So they live and die with the price movement, but the effect of getting liquidated, like in the CFD industry, was not present. But retail behaves similarly. It's nothing specific that we saw with retail when you look at the digital asset industry compared to traditional finance industry.
Okay, so based on this, maybe Amir or Amna, who do you think shouldn't enter tokenization? What amount of knowledge is required to actually enter the whole area of tokenization?
Well, just because I think I can box does not mean I have to step into the ring with Anthony Joshua, right? So
that's true.
You have to learn. So it doesn't happen like any other asset class, like any other financial instrument. You have to educate yourself about the instrument, the tokenized asset, whatever you're buying before you get into it. And there is no wax on, wax off. You learn kind of by reading about it, doing it, working through platforms that enable this kind of empowerment and education, but just do it with eyes open.
That's great.
Yeah. I'll just add quickly to Amar's point that basically tokenizing an asset doesn't mean that you change the asset. The underlying asset remains the same. So if there is risk in the underlying asset, so that obviously transfers beyond as well. So that, you need, as Amir mentioned, you need to do due diligence, look at market jurisdictions and all of the other things. Do your own research before entering the market.
All right, thank you. So, yeah, let's wrap up. I would like to hear one factor from each of you guys for our audience to give them more clarity on tokenization. Maybe what you see is most important for next, let's say, 1 to 2 years that they should take into account. Anton, maybe you start?
Yeah, I will circle back to what we mentioned at the beginning. Tokenization is one of the biggest promises of the blockchain. So what we imagine today, every piece of information is on the internet, right? Kind of we have similar vision or similar ideas that in the future, every asset that you can imagine will be on the blockchain in tokenized form, hopefully with a lot of liquidity, and that people can exchange them, right? So this is the end vision. So it's a part of a big mega trend. I think that's why it's so exciting to be part of this big megatrend, to contribute it, and this is what we at RW Labs do. I still want to emphasize that we are very, very early on in tokenization, and that's why today when we had this panel, we're talking a lot about challenges. We're talking a lot about the people who are pioneers like Amir. We did something the first, right? First ever collaboration with the Dubai Land Department and so on. So this also, I want to make things a bit more calmer in terms of enthusiasm. We are very early on, but it's a massive megatrend. I invite you to all be a part of it. And because it says, is now the right moment to invest? It's early, but people who are early usually get rewarded for being early.
Okay, that's from the advisor. Let's go from the compliance.
Well, over the next 12 months, you said 1 year, right? The most important factor for investors assessing tokenized assets is the trust infrastructure. Is it real? Is it tested? And that means custody, that means enforceability, that means governance, that means operational resilience. And the practical test is straightforward. Any investor should be able to answer 3 questions very clearly. Who holds the assets? What happens if something fails? And how do I exit? If any of those answers are vague, then that asset is not ready yet for institutional capital. So liquidity attracts attention, but trust is what attracts capital.
Can you repeat the 3 questions? I think that's really important. It was great.
Who holds the asset? That's question number 1. Question number 2, what happens if something fails? And question number 3 is, how do I exit? So those are 3 things. If you can't answer those 3 questions, then the asset itself is not ready for tokenization.
Thank you so much, Amir. Omna?
Yeah, I agree. And adding to that, I think an important factor is also the market conditions. So it's important to look into the jurisdiction as well. And that is because, for context, we're moving into a world where humans won't be tokenizing, AI agents will increasingly be tokenizing. So we'll be moving in a world of autonomous finance where AI agents will be working in swarm intelligence collectively towards a certain goal. And this is important because then the question of governance comes in. Who is responsible for the underlying tokenized assets? And this is why governance and jurisdiction is so important. This might sound sci-fi, but it's actually happening. I think all of us would probably be aware of the Moldbook OpenClaw scenario that happened last month, where AI agents set up a social platform, and then they were, humans were only allowed to observe. And in financial services as well, at Davos, the Stablecoin Circle CEO said that we are moving towards a world where hundreds of AI agents will be moving the stablecoins, and Tether, another stablecoin leader in the world, has also been very visionary and working on this with their QVAC platform for decentralized AI, for their AI agents, their wallet development kit, and all of the likes. So we are moving in a very different world, and we need to start asking the questions now. So which jurisdiction is safe, is responsible enough to tackle these questions early, and also keep keeping in mind the geopolitical risk that we are seeing in 2026, I think one main focus should also be the market conditions and the jurisdiction for investors.
Okay, great. So yeah, we are at the end. We clarified here that tokenization is happening. It's real and it exists. Yes, there are risks. There is a liquidity risk. There is a trust risk and so on that we all need to take into account. But I hope we clarified it further for you guys and you have more clarification right now on the tokenization. For me, myself, the note I'm taking is actually who, what, if, and how to exit. I really like the whole idea, and I hope everyone gets something out of this conversation. Thank you so much for being with us. And yeah, hope to see you around in the expo.